Morning everybody, it's Chris here from Serene Education with the 4 majors notes update for the 9th of May 2012. Hi everybody, we're going to concentrate on looking at the 4 majors this morning, starting with Euro against US dollar. Here in front of me I have the daily, and you can see that for the first time, yesterday's candle quite bearish, however still closing above that psychological 1300 mark, but Asian market trading has seen price dipping lower, and going into the European session open we're trading lower, and most importantly our CTC has gone red. Has been red over the last 4 days, 3 days in particular. Nice red arrow followed by the candles and the CTC on the other side. The only thing that was concerning us was this psychological very strong support at the 1300 mark. You can see for the first time we're trading below it, but you can see at 12.95 there happens to be a little resistance level, and you can see we've been consolidating through this bandwidth over here. So the most important thing is if price continues to fall and fails to maintain those highs or that level above 1300, then we are starting to see a definite close below a major support area. Look at this, guys. Through most of this year we've seen price actually finding support at the psychological 1300 mark. If we see a breach of it and a close bearish than that, then it's definitely telling you that the sentiment is looking favorable, negative, long term, and there's definitely some issues psychologically on price action for the euro for the foreseeable future. And our next target should and would be roughly around the 12.6500 mark. We've been there before in early Jan, so there's no reason why we can't be going back there again as long as we find a definite bearish engulfing or failure here at this 1300 mark. Hourly chart, you can quite clearly see that price has been ranged into the downside, lower swings depicting downside trend, and most importantly all the moving averages above price, including the institutional moving average. And you know the relative strength index is below 50, so that's telling us that this trend is definitely negative. However, as we've gone into this break of 1300, the 12.9500 mark is also a prior fib retracement area, and you can see that we've had a stall here, and it was oversold, and we saw price bouncing higher. We saw buying sentiment creeping in, which is true. However, that range is still below the 50, so it's depicting still negative sentiment to the downside. And yet again, as we head into this 12.95, you'll notice the relative strength thickness is starting to increase now. So as long as it maintains below 50, then we know that the overall sentiment is still negative. However, we'd like to see a resistance now at the 1300 mark. So wait for price to consolidate to give us a bearish engulfing here at this price support. And we get a nice bearish engulfing, and then it's telling us that there's a definite breakout to the downside, with ultimately those areas at 12.6500 is our next potential target long term. Moving on to sterling, let's have a look and see what's happening on the daily. You can quite clearly see that after this extension break of the psychological 1600 mark, which happened to be a very strong support and resistance in the past, price had rallied to the upside quite drastically. Since then, the past week or so, we've seen a pullback, and we've come unstuck here just above the 20-period moving average. If you take a fib retracement level from the start of this upside trend over here, there we go to the high recently. Okay, let's see where the pullback has taken us. Well, we saw 23.6 here at 16,200 being tested, and then we saw a break, and then price rallied to the 38.2 area, which brought us back towards the 20-period moving average, where we had a slight hesitation here a couple of days ago, or a couple of weeks ago. Prices fell to break below that. So psychologically what it's doing is it's taking us back to a price support and resistance level, which happens to coincide with the previous resistance level here back in October, November of last year. So this is very important. As we've rallied higher, we've broken above a major resistance level in the past, and in doing so we've saw a slight consolidation before we saw a further push to the upside. Since then, we've seen price reverting to the downside or pullback. Now what's very, very important is if this is to remain still upside positive, we do need to see prior resistance becoming a new support. Okay, so we do need to see price finding support above this the 16,1200 mark, and in doing so finding a bullish engulfing and then pushing higher than the 23.6. So if you're looking for an entry for this pair long term, ideally you want to see a close below above the 16,1200 or 16,200, apologies, with our outlook at 16,300 as our first potential target. CTC, remember, is still blue on either side, so the trend is still positive, and that will remain so until we're trading above all the moving averages, including the institutional moving average. So you can see the upside swing high depicting upside upside trend. Very important. So we know that's in our favor. Fantastic. Now the most important next step is to see a nice bullish engulfing here to confirm that this 38.2, which happened to be prior resistance, is a new support, and then we'll see price bouncing to the upside. The other scenario would be to see a bearish engulfing, breaking below this 38.2 and breaking below and closing lower than this prior resistance level. That will dictate that we should be looking back towards the 50% and ultimately back to 61.8, which happens to be the 1600 as our next potential target, and to the trend line. And eventually we do see that this is the last port of call. If we see price breaking below 1600 again, then we should be ultimately looking for further downside movement to ultimately back down here towards 100% retracements, which would take us to the institution moving average, which would be a very bearish outlook long term. So very, very important for this to remain positive. We do need to see 38.2 becoming a support area on a prior resistance. A failure to do so would see price breaking below with a bearish candle, which would give us a negative sentiment short term, i.e. the next week, and we should be targeting back towards 1600 for the foreseeable future. Okay, the next one is the US dollar Swiss franc, good old Swissy. So what's she been doing lately? Just pretty much consolidating and hanging above this the all-important institution moving average, but moving sideways. A lot of consolidation sideways through most of this year, like its European counterpart. And so where is this likely to go to? Well, as you can quite clearly see on the hard right edge, we're having blue across the board. Our strategy indicates that we need to see blue across the board in order for this to be positive. Excuse me. And you can quite clearly see that we have a blue arrow, blue candle, and the CTC graph on our histogram on either side is blue. So it's upside positive. All the moving averages are below price, which is fantastic, in order 20, 50, and the institution moving average. So where to next? Well, you can see the all-time low here that we saw back in August, and the high that we saw here in early January. You can see that we're sitting above the 22.6 mark, which happens to be quite good because then the pullback hasn't been as strong and sharp. So you can see a lot of hesitation around here at the 9,000 mark or the 900 mark. A lot of support, and we've seen bounces to the upside because of that. Now what's happened is you can see the high over here, for example, to the previous low just recently. So you take the high to the previous low. There we go. This one over here. This is our low short term. Okay, and you can see price has been bouncing between these two fib retracement areas. Bang, bang, bang. And you can see just recently, 2 days ago, this area here has been a stalwart for this for price action. Yesterday's candle upside positive. However, you can see that we've come short at this area here, which happens to tie in quite well with prior resistance back in early February and mid-March. Mid-Feb. So where to next? Well, we do need to see a psychological break above this area here to see any further continuations to at least a 930-500 mark as our first potential target, which happens to take us back to prior resistance and support back in early January of 2012. So ideally, for this to continue upside positive, we do need to see a break. So today's candle breaking higher than this area here. If I can find out what that is for you, bear with me for a moment. It's the 9269 mark. Break above that would definitely confirm that we should be looking upside. Or the other outlook is we get a bearish engulfing here at this area here, and we should be targeting back towards a 9200 mark as our potential target, as this happens to be a prior resistance level. So this should be the new support. So pullback, support, and then continuation higher. So that's the outlook. So as long as it maintains above 920, then we should be looking for positiveness. If it breaks below 920, then we should be looking for back towards the 910 and the 900. So a break above this area here would see targeting of 935, and a break above that would target all the way back up here to 960 that we saw previously in early January. Last pair of the day is US dollar Japanese yen. Let's have a look and see what's been happening on the daily. Hesitation just recently, but you can see the downside movement is definitely in play. Lower swings depicting downside trend. So where is price in conjunction? So we can see the all-time low here that we saw in February. We had this massive rally at the start of February. And then we topped out here at the top just above the 8400 mark. 8400 being a really significant support and resistance level, because this happens to be a very long-term support and resistance level going back a number of years. So got to put that in just to indicate a very, very strong resistance level. And you can see a lot of hesitation, indecision, spinning tops, and shooting stars, bearish engulfings, and then price reverting to the downside. Finding a bit of support at 23.6, and then breaking and heading towards the 38.2. Here again, finding resistance at 38.2 and heading lower, not quite making it to the 50, and then we saw a psychological bounce. But since then, the sentiment really looking negative as price action fell to really push higher on this bounce. We headed into 80, which happened to be a very strong, also a very strong support and resistance level in the past. And we're thinking, well, breakout, pullback, and then a continuation. So as long as it maintained above the 80, then we should still look potentially long. It should still look potentially strong long term. However, as we headed into this 80, you can see price dipping below the 80 mark. On the support here at 50, and then that bounce that we were looking for, not all that genuine, and you can see a lot of bearish wicks. And then we've seen price spending more time below the 80 over the past couple of days than above it. Okay, for this to be long term strong or bullish, then 80 needs to be the support area. And as long as if this area here at 80 gets breached, then there's more likelihood of further bearish sentiment to be the number one player on this. And you can quite clearly see that CTC now, we've got our hesitation candle way back here in early March and mid-March, but the CTC overall was still positive. It's only when we started breaking this and heading towards this 80 mark that we started to see the CTC really coming to its own. It's a very lagging indicator, and you can see there's more bearish sentiment going into this setup than there's bullish sentiment. And you can see that past 2 days prior to today's candle, a lot of hesitation, a spinning top followed by a doji. So a lot of indecision, and that's happening or occurring below the 80. If it was occurring above, then there might be thought to see there might be a positive push to the upside, but it's happening below. So one or two things could happen. For this to play out, then more we're going to see is a nice bearish candle pushing away from the underside of the 80, and then we should be heading towards the 79 followed by the 7800 mark, which is our next potential target on this pair, which happens to be another very strong support and resistance level going back a number of months. So you can see quite clearly we have a target, a definite target, if and when we get a nice bearish push away from the 80 to the underside. The other thing that can cancel all this indecision is a nice bullish engulfing. Nice bullish up candle engulfing all of this indecision. You can see prices just trading sideways, not doing a hell of a lot, which would then depict that we should see the psychological bounce at the 80, in and around the 80 mark, for further upside movement or targeting back towards 8400 for the foreseeable future. Until then, everything looks bearish, and we should treat this as bearish. Okay, so the longer it spends time below 80, the more likelihood is that we're going to see further extensions to the downside. So if you're looking for a setup, look for a bearish engulfing here to cancel out all this consolidation, this hesitation under this area here. And now it's finding resistance. Prior support becomes a new resistance, and if there's a new resistance, then we should see price reverting to the downside. So all we want now is a nice bearish engulfing, and then we should be targeting 79 with 78, and ultimately way below 78 for target these lows that we saw back in February of this year. That's it, guys. I hope you have a fantastic trading day. Please ensure if you are following the rules of the strategy to follow the rules of them and to implement them with sound money management rules. Back them up with really, really good strong money management rules. If until then you don't find anything, just be patient. It's very, very key. So all that is for me to say is I hope you have a fantastic trading day. Keep your trading simple, and I'll see you first thing tomorrow morning. Until then, trade serenely.